Welcome back to Money House Media, your trusted guide to financial clarity. In Part 1, we asked if homes are getting smarter or simply unaffordable. In Part 2, we took you inside the green home revolution and the cost of sustainability. But today, we take it further. Because the future of housing isn't just about how homes look or save energy. It's about how they're built and how they're financed. So before we start, make sure to subscribe to Money House Media and tap the notification bell so you never miss what's next in this 5-part series on the future of housing 2026. Imagine watching a house being printed layer by layer like a giant 3D puzzle. Companies like Icon, Mighty Buildings, and Lenner Innovations are already doing it, printing entire neighborhoods from concrete mixtures guided by robotic arms. A home that once took 3 months to build can now be completed in just 2 weeks. Automation cuts labor costs by as much as 40% and reduces material waste by half. For cities struggling with housing shortages, that's a game changer. Every day saved in construction means more families getting homes faster. But here's the paradox. Efficiency is expensive at first. A commercial-grade printing rig can cost between $500,000 and $1 million. Early projects depend on venture capital and government grants. That means while 3D printed homes are cheaper per square foot long-term, early buyers still pay the innovation premium. Analysts expect smart construction to hit mainstream scale by 2027 to 2028, when automated production lines replace traditional job sites. Until then, we balance between promise and price. The next construction revolution doesn't use cement, it uses code. Artificial intelligence is now writing the rules for how loans are approved. By 2026, more mortgages will be underwritten by AI than by human hands. Fintech companies like Roam, Better, and Blend offer instant pre-approvals that analyze income, bank data, and even energy usage in seconds. Borrowers benefit from speed and customized rates, but there's a catch. When algorithms learn from biased data, inequality can be baked into the system. That's why federal regulators are rolling out digital fair lending rules to ensure AI stays accountable. As homes get smarter, so do loan programs. New green and smart home loans let buyers qualify for more because AI factors in lower utility bills and maintenance costs. Imagine getting approved not just for your income, but for your home's efficiency. Blockchain-based closings are cutting paperwork and title costs by up to 30%. Transactions that once took weeks can finish in just 3 days. That's time and money back in the buyer's pocket, real savings driven by technology. For builders, 2026 marks the beginning of a manufacturing mindset, homes built in factories and assembled on site. For lenders, it's the age of algorithmic approval, financing that adapts to each borrower in real time. For home buyers, this is a moment of opportunity and urgency. Those who prepare now with strong credit, digital banking records, and energy-efficient goals will lead the next wave of home ownership. So, what builds the future? Bricks or bytes? Maybe both. The future home isn't just smarter. It's self-learning, self-financing, and self-sustaining. But it still needs one thing no AI can replace: your vision to own it. If this episode brought you clarity, hit subscribe and stay tuned for Part 4, Living with AI Inside the Fully Connected Home. This content is for informational purposes only and should not be considered financial advice. Always consult a licensed mortgage professional before making loan decisions. NMLS ID 1020597.